And talking about startups, you see African startups collectively raised $250 million in funding in October. According to the report, the substantial raise also contributed to making October 2024 the second highest month for funding, this year, surpassed only by July. You see the year-to-date funding about $1.7 billion, and for October, $250 million. But we see the year-to-date funding, that's down about 32% if you compare that from the previous year. Then we also get a check on the top unicorns in Africa. I will see those unicorns that are attracting most of those funds. You can put that up for me. We'll see most of those companies with the likes of OPay on that list. We'll also see most of these fintech companies, on that list of unicorns. And those are companies that are valued about over $1 billion at this point. Quite a feat there for most of these companies that are startups in Africa. But joining us to unpack most of this, we have Mr. Amori Adoheware, is a founder and partner, ENC Legal, joining me for this conversation. It's great to have you.
Thank you for having me, Ladi.
Yeah, so it's nice, when you see, some of these Nigerian startups, getting to this status, this revered status of a unicorn. But if we're looking at the data now, we see it's mostly fintechs, that are there on that list. And, definitely you're wondering what's happening to other, segments at this point.
Well, for want of better language, I would say that it's probably one of the easiest startups to run because it's fully digitized, right? So the hardware component of it is not as demanding as, let's say, agri-tech, right, or health tech. So you could have a fintech company start in a small room and begin to provide services. A lot of it is leveraging heavily on partnerships with traditional financial institutions. So it's no surprise that they seem to be taking a lot of the headspace when we think of startups. But really, the second most important thing is our population. You have 230 million people. And that number is still debatable.
Right.
Consuming, spending money daily, that tells you a lot, right? And so getting into that space, and remember, we still have a financial inclusion challenge. So about 46% of our population remain financially excluded, right? So there's the market. People are consuming. MoneyPoint did 5.2 billion transactions. That tells you a lot, right? So if you just sit back and look at what the commission fees on those transactions would be, it tells you, what you need to know. And what's interesting about fintech startups is that a lot of them are leveraging on the gaps that the traditional financial institutions have allowed to be in place, right? And are bridging a lot of these processes by making very seamless, otherwise cumbersome processes. So you have fintech startups today that are able to issue cards using their local POS operators.
It's quite interesting that they can actually send, some of their cards to your home.
Yeah, so, you sign up. The notion, so if anything, what our fintech startups have done is that they have killed, and I use that word intentionally, that notion that before you embrace financial inclusion, you have to go to a physical location. You have to fill forms. You have to wait for certain processes and time. That has been compressed and crashed. So today, on the comfort of your device, you're able to sign up. You're able to provide all the information that they need. And, before you know what's happening, you get a mail.
Well, looking at these fintechs, how much do they rely, on the traditional banks at this point? Because I've heard some conversations saying that some of these fintechs still rely heavily on the traditional banks.
They all rely heavily.
Exactly. So
the financial industry, right, and the financial ecosystem is one that you don't have one entity going B2B, right? There are collaborators. So one entity cannot complete and finish, cannot start and complete the process. For instance, you have NIBs, right? Every inflow must at one point or the other go through them, right? You have, so some fintechs are payments service processing companies, some are switching companies, some are mobile money agents and all that. Now, they are all interwoven, right? So you must rely on certain institutions. For instance, most of these fintech entities do not have the license to domicile these resources with them. So they rely on partnership with the traditional banks to domicile the resources, right? What they predominantly do is easing the transaction flow, right? Bringing you into the foray and easing the transaction flow. And I think that it's a beautiful show of the power of collaboration. It's a very, very beautiful show of the power of collaboration. And I was speaking to some health tech founders, and I said, if only they could do just a little bit of the sort of collaboration we've seen in the fintech space, right? I think that our healthcare indices will improve. You know, so
and it's quite interesting, that you'd mentioned that, because I find myself, most of the time when most of the banks started doing the upgrade, that's the traditional banks, I find myself sending money to the fintechs, then, because that way I feel like I'm assured that, once I send money out, it's going to go out.
In fact, what has happened now is that many of these, everyone now has a backup fintech account, right? So you're either using one, let's not call names, but you're either using one or the other, in case the big names, mess you up in quotes, you have that fallback on. That's the beauty of competition. Right? And the only thing I would say, so we don't have another Kodak example, is that the traditional financial institutions must now understand that we are in an era of technology and innovation, and the speed of innovation, if they are not careful, will overtake them.
Right. And talking about overtaking, we've seen most of these startups in Africa, they raise, good amounts of money, and October was quite good.
Yes.
For most of the fintechs. But looking at 2023, Nigeria normally led, when it comes to, bringing in these funds, for the startups. But for 2023, Kenya took over.
Kenya has taken over.
Yeah. Why is that?
Well, Nigeria has 3 key challenges. First is that our ease of doing business indices is still not as it should be. We're on our way, but we're not there yet. And that's one of the reasons I'm excited at Dr. Jumoke Oduwole's appointment. She's been at the forefront of ease of doing business. Now she's at the driving seat. And we do hope that, her work and years of experience will come to bear in easing some of these processes. Secondly, our dispute resolution framework remains a major problem. Investors want to know how easy it's going to be for them to resolve disputes. They don't want to hear Nigerian courts, right? So you can imagine I sit on that table literally every week discussing either investments or some level of corporate governance structure with startup founders and their angel investors or VC firms. And one of the challenges they always say is, look, we cannot work with your dispute resolution timeline. Right. So that's another challenge. And so that's why you find a lot of these startups moving to having holding companies outside. And then you also have the third key elephant in the room, which is corporate governance failures. Right. We've seen quite a number of corporate governance failures. We've seen quite losses, not caused by the absence of a market, but caused by the absence of a structure to help the startups, build impactfully and contribute to the growth of the economy. And so these things are issues that investors are seeing. So previously, due diligence sheets were maybe 4 or 5 questions. emphasis was on the product and the novelty and ingenuity of the product and how it will impact. Now emphasis is more, beyond that, is now on the people at the driving seat, on their credibility, on, a lot more checks, right, than that typically would not be in place. So those are some of the things. And then you also have, the regulatory challenge here.
Yeah, and talking about regulation, that brings me, to my next question. Definitely we see most of these companies operate in, multiple countries, and most of the time you have to be under regulation in one country and also, another country. So how are they navigating, all of these, most of these fintechs that operate, internationally within Africa?
Yeah, so it's just scaling, and that's what we call scale. You build in one place, and as you begin to conquer your local environment, you scale, within the region, sub-region, region, and even globally. For financial issues, the regulation is jurisdictionally based. So every country, every jurisdiction have their own rules. And so if you're able to comply with their rules, then you get the relevant license. But remember, Nigeria...
Is there a shock when you're moving from regulation in Kenya to, say, maybe Nigeria? Do you get the shock from that?
Well, there will always be a shock wherever you're moving to, irrespective of who is the one doing the moving. Right? But the selling point for Nigerian founders is that oftentimes we are the biggest, in quotes. We have the biggest market, and our innovations are such that continue to pique the interest of other countries. And so they want to see what you're doing. They want to latch in on what you're doing. MoneyPoint, for instance, is expanding, right? And they're even moving into the Asian markets. And so you find that it is based on their successes in this part of the world that is now eliciting the interest of other areas. But definitely, they have to play by the rules. They have to get the relevant licensing in those jurisdictions. And if they make it, then great. They expand. So you don't move with one license to another place. You build a structure within the jurisdiction. Now, some things may give you rights of first refusal or give you an ease of obtaining licenses in these new locations. But really, you are literally reinventing the wheel everywhere you go.
And definitely a big move as we look at the global political space, with Donald Trump there, getting that hot seat, at this point. But, a lot of people, a lot of countries, trying to understand what that means, for, relations, with the U.S. And definitely we know a lot of funding, comes from the U.S. for most of these startups. So what's the community, or how are they seeing this win here, right, Trump?
So Trump is pro-U.S. And so that's the beginning of the conversation. Trump is pro-U.S., pro-America. And so I see more of a transactional relationship.
You make it sound like the others don't really care about America.
No. So when I say pro-U.S., Trump so America has that large heart, is deemed to have that large heart where they are leading the world. And so it's like a first child. So sometimes you may have to take a back seat so, your younger ones could get certain things. So for instance, in this part of the world, you hear stories of where the first child goes to learn a trade so that the younger ones can go to school.
Right.
You make those sacrifices and all that. So America is the, Uncle Sam, right? But so I see more of a US-centered relationship with the rest of the world. If it's not benefiting the US, I'm not dealing, right? Because he's made it crystal clear that I am focused on rebuilding my country, whatever that means, right? I'm focused on US-centered policies, and that's good. What this only means is that you're going to have less aids, but more investment. Africa continues to be the biggest destination for global investments. We have the human capital. We have the technical intelligence, right? our human capital resource remains our largest export, not oil.
Right.
So Africa continues to be that destination where people will come to have those conversations. Our startup landscape continues to grow and build, right? And so private equity investments from the US would definitely soar. But the thing is, for us now in this part of the world to have a stronger bargaining power, we must now begin to fix issues like our infrastructure, like our ease of doing business, right? So if someone wants to come and invest, he needs to know that the dispute resolution framework in this part of the world is such that is pro-business, right? And those are the issues that will help boost trade, especially with the US at this time. I do not see that aid-driven relationship where we go for, we need aids, we need this, we need that. I think, and I may be wrong, right? I think that would be greatly reduced under this administration. But however, given his private sector background and his penchant for business, I see more investments conversations between American businesses and African businesses springing up. I see that enabling environment growing.
Okay.
But as a country and as a people, I don't see us, leveraging heavily on those aids that have made us, possibly laid back.
Right. And I guess it's time for us to also maybe start Nigeria first, at this point. And you're talking about everyone at this point.
I was saying something in an interview recently. I said, look, in this digital economy that we're trying to build, if we do not fix infrastructure, if we do not create a system that actually enables this digital economy, we may just be paying lip service to it. And I say, look, the Ministry of Digital Economy, NITDA can do great stuff. But if that ministry somewhere does not understand how startups operate, does not understand the speed of technology and innovation, and does not understand that this health tech startup, this agri-tech startup needs this approval to be able to do this kind of business that will provide 200 jobs in this small locality and implode certain benefits, right? If they don't get it and they still play the typical game, then we're really not paying we're really just paying lip service to the digital economy we're trying to create. It must be a mindset that permeates through the entire system. And I'll tell you one major challenge we have is that where you have founders build phenomenal products and, begin to grow big in the Nigerian market, the next thing for them is leaving.
The exits at this point.
Right? No, not even exiting, not even the startups exiting, but the founders moving. Right? Because they've gotten so used to a particular speed of innovation, speed of doing things. They have gotten so sucked into the need to achieve timeless delivery on projects that they can no longer function in a system that stifles that speed. So automatically, it's oftentimes not even a matter of choice, but a matter of expediency. And that's because we can hold conferences, we can pay lip service to it, but if we do not create that enabling environment, if we do not create that infrastructure that cuts across the core drivers, but to even the small local governments, right? Then we would not, be doing what we should to enable sustainably the digital economy we're trying to create.
All right, so much definitely to unpack there. And as we go into 2025, we hope we start making the right moves, in that direction. But thank you so much. It was great having you for this conversation.
Thank you for
Omori is the founder partner, ANC Legal. Thank you so much.
Thank you for having me.
All right, we'll take a break now. When we come back, we'll see if the markets are still reacting positively to the Trump leadership. That's the moment. Just stay with us.